Good morning, traders. This is Michael coming to you from GammaEdge on Friday, November 1st. We hope you all had a great day yesterday. We'll go ahead and start with the pre-market morning strategy and briefing session. As we always do, we start with three pillars here at GammaEdge: sentiment, structure, and trend. We'll start with the trend. Obviously, that should be the cornerstone of all your trading plans. We continue to see risk off in the overall market trend model via the bolded white line, which is our CT. That's our instantaneous indication of buying and selling intraday. It is below all the moving averages and continues down. We did have what we call a linear down day, denoted by here. Also, our cumulative filtered tick that we monitor showed institutional selling yesterday into the afternoon. It was also linear down. So as we stated yesterday, and we continue to be stating that our stance here is that all rallies will continue to sell rallies until we see a significant change in the trend, which would be the bolded CT crossing back above the moving averages. We spoke about this consolidation on Wednesday and the possibility of failure. And we said to caution was warranted. And if we did get a quick failure, that most likely your opportunity would be to the downside. And that continued throughout yesterday. So the first step obviously would be some sort of flattening in the cumulative bolded CT, the tick there, and then a crossing back above at least the first second moving averages. Then you could look to possibly take some risk off of your long side, but then continue with a runner type position or continue to hold if we continue to the downside. Again, as the red continues to expand below the cyan, this is emboldens the sellers even more, and it makes it more difficult for the CT to move back up through this colored ribbon as this continues to expand and continues to be a ceiling overhead for the buyers. So we'll continue to watch this. Again, we could get reversals, and we'll note that intraday if we do see the bolded CT go back above the moving average. But then we would continue to have our stance and thesis that we would see some sort of failure as we get up to the colored ribbon as the first line of defense of the sellers. All expiries turned on here for the SPXP. Projected open would be 57.30-ish, somewhere around in there. You can see this is completely red delta. These are in the money puts above us. We see the transition expand. That's obviously uncertainty. When we see uncertainty and holes in the overall structure, then it tells us to be a lot more risk adverse, unless you're looking to do intraday shorts or just button the seat 0DT trades. Any move back up towards 57.50, we would look for some sort of failure. That obviously is full expiry. The bottom of the transition, that'd be the first line that I would look for some sort of failure of price moving back up. If we do get above 57.50, then 5800, 57.75, and then 5800 obviously would be the next line up there. 5700, a large area to the downside here. As you can see, not a significant amount of OTM puts below us, but if we do get below 5700 and we do see vol M with both negative slopes, then we could traverse down towards that level. I'm not anticipating 5700 to be violated significantly today. Could see a possible drop below, come back above, but that end of the day extreme risk off at the close yesterday may have been kind of some short-term washing out or some short-term extreme that we do see some sort of bounce back above. But I'm not taking it off the table that if we do get below 5700, we could see more weakness down towards that 56.75 and then 56.50 down here. Obviously, put dominated above and below spot price. We pretty much discussed that. Delta balance chart, we continue to see it weaken, and now we have a strong bear throughout next week also. So we would need to see this significantly change for us to, or at least me or us here at GammaEdge, to change our thesis that we would have the possibility to move significantly to the upside. Now, with an overall downtrend, you are going to get the ebb and flow of the market. You're going to get that what we call sine wave of fear and greed, where the puts monetize, they take some profits. You do see a bounce back up, but then we do not see that OTM call speculation come in. You'll see that in the right-hand plane if it continues to change. And then the left-hand plane, obviously, you'd see those OTM puts start to close and you expose the ITM calls. Unless we see that, we do not see the opportunity or possibility for a significant bounce. So what's a significant bounce? A significant bounce for me, just personally speaking, would be above 5,800 up towards 5,850. Obviously, that's the area that I'm going to be watching the delta balance to see if it changes from any right-hand plane, left-hand plane, structure day over day. And as you watch this waterfall chart, you saw it continue to weaken. And we talked about that multiple days as the MTM was selling off. Sellers were in control. GEX ratio continued to drop. We talked about this multiple times, that there was going to be some sort of resolution, whether it was with spot price or GEX ratio would come back up. But the short dated calls were eroding pretty rapidly as we moved down towards the one GEX ratio. And then we just saw the short dated puts completely swamp the short dated calls and take over. And now we have getting close to an extreme on GEX ratio. So 0.6, 0.8 is an area to take notice on the GEX ratio. It can stay at an extreme level for an extended period of time, depending on what's going on in the market. But usually somewhere around the 0.6, 0.8 level, we'll see some sort of relief bounce or relief rally back to the upside. So we may be getting close to that. So just make sure you're watching that and taking heed of that warning. Again, fear and greed component. If you've been short this whole time, yesterday at the close would have been an opportunistic time to take probably some profit as we came down to that 5,700 level, which was an area that we've been discussing. And then just keep some sort of position on, and then see how the rest of the price action plays out. SPY continues to be weak. We've talked about that. Strong bear all the way into next week. We do have this left-hand plane weak bull today for Friday, so that could be some sort of supportive action. 570 is where I'm watching on SPY. That's where we tested yesterday. If we hold above that, then I would anticipate probably some sort of consolidation or choppy, or some sort of drift back to the upside, minor drift back to the upside. Possibly 574, 575 area. Qs have weakened pretty significantly into next week. We saw that it was strong day over day. Actually, even yesterday for Friday, it was a strong bull and then quickly changed to strong bear. So when you see these abrupt, quick changes, obviously you know that the call speculation basically is throwing in the towel. Put speculation is just swamping the overall call speculators. And you see a just total flip one day from strong bull to strong bear. Usually what you see is a slow erosion of the call speculation, or slow erosion of the put speculation if you're looking to move back to the upside. But we just had a complete flip yesterday. Just you see the GEX ratio drop also. So that's indicative of the delta balance. What's happening, numerator, denominator, calls on the top, puts on the bottom. The calls just completely throw in the towel. That numerator drops really rapidly and your denominator picks up, and then you get this GEX ratio drop down to 0.6, which again is an opportunistic area where we've seen a bounce before. Not saying to go along this area, just be cognizant of where the GEX ratio is at, and when you're reaching those extremes, fear and greed in the market basically rules. So wherever that is going to occur, where put monetization decides, the put holders decide to take some profit, then you'll most likely see some sort of bounce. Delta balance, again, on the projection, is not projecting anything into next week of being strong. Could change after today, first of the month, we'll see. I would anticipate through next week, obviously everybody knows we have election on Tuesday. I would anticipate not a significant change in the market until after Tuesday. Doesn't matter what happens on Tuesday, just the uncertainty can get removed, hopefully within the next week, 2 weeks. And then once the uncertainty is removed, then usually positioning for the Q1 will start to come back in, and then we'll see some sort, hopefully, of directional bias or structure that is much more tradable than what we look at right now. Zero DTE for today. Just structure, the transition is narrow, which is great. We've already talked about 57.35 to 57.40, 57.50, somewhere around in there. We see PGEX 57.45. We look like we're going to open somewhere around there into transition. We've drawn the drunken sailor range from 57.20 up towards 5,800. Again, all these in the money calls above 5,800 are worthless. We're talking about all these puts down below these area are worthless also. So not a significant amount of targeting or negative net delta call or put OI below 5,700. So that's why I'm saying it may not have the opportunity to go significantly to the downside. You see it really kind of starts to cut off at that 56.85 level, 56.75. That's why I talked about that on the full complex. Unless we see vol M with two negative slopes and we see a significant volume of put speculation down towards these levels, I'm not anticipating us to move down Towards that, I would assume if we do get a quick undercut, it would be just an undercut, most likely some monetization, and then back up above 570. So again, anticipation, I'm not saying that's what's going to happen, just looking at the overall structure and complex and understanding that. You see this bell curve kind of here that Paul's drawn out, highest net delta gamma levels obviously within this overall section right in here, and then we start to drop off that curve up here towards that 57.75. So 57.50, if we do get above that, obviously could push up towards that 57.75. It's just a significant amount of in the money puts above. So again, as we push up, with the in the money put holders do start to feel a little bit of discomfort, and then if they start to monetize, but just put monetization cannot drive price higher. We have to see OTM call speculation. So on vol M, if that call centroid is negative, then it's just, the sustained move to the upside is just not going to happen. It's just not sustainable just from a put monetization event. Now, put monetization can cause a quick abrupt move to the upside in spot price, but it's just not sustainable unless we see the OTM call speculation. So we'll watch the net stack command. Make sure you're watching the charm. If we're just trending sideways, who's winning the battle? We talked about that yesterday live and into the close. +1 DTE, again, wide transition, uncertainty. So obviously this is into Monday before the election. We see PGX 5810, I'll just call it 5800-ish up there. And then 5700 is NGEX. So again, that range of 5700 to 5800 may be the most probabilistic if we get above 5750, 5775. So we'll go to our thesis for today. Or I would say how I'm going to trade. Yesterday's price action, just a tech, or I don't want to say textbook, but really a indication of what we've been talking about. Just a quick move to the downside, and then we did see that abatement of the call speculation. We talked about that. The call, or the put speculation. The put centroid was flattening out. We did not see a significant amount of OTM put speculation. Really, it kind of cut off around 11 o'clock. And then we weren't anticipating a significant move downside. And then obviously at the close, into the month, whatever's going to happen is going to happen. But we pretty much had that pegged really well. So for today, if we open at 57.30, 57.35, somewhere around in there, I've drawn this TA line. I think it's important to combine TA with key gamma delta levels to help your trading. It's just my personal preference, and this is what I do. So I trade if-then levels, unambiguous. If we're above 57.37, 57.35, and we do see some sort of positive slope on the call centroid, I absolutely think we could test up towards 57.50. That, for me, it will be kind of the line in the sand, depending on what's going to happen for the rest of the day. If we get above 57.50, then, and we see the call centroids up, MTM sort of up and not pointing down, then I could see a drift up towards 57.75. If we reject at 57.50, pretty hard, I think a move back down towards 57.35, and then below 57.35, you're looking at the bottom of DS, which is 57.20. Now, caveat, DS is 57.20 to 5800. These are butt in the seat, 0 DT trades where it's going to be highly volatile. Expected move still up there. VIX is elevated, obviously uncertainty into next week. So you're going to get very quick moves. If you're not adept at trading 0 DTE, don't trade 0 DTE, or just don't do anything until after next Tuesday and we get some certainty in the direction. I know that's not what people want to hear, but this is just warning of what can happen. You quickly can get chopped up or just get some sort of spike, just overall volatility. And get shoved out of your position pretty quickly. Now, if you're doing some sort of spread, some sort of butterfly, once the volume flattens out towards 11:30 or 12, then that's slightly different because your risk is defined on both sides. But just directional trading today, I think, is going to be very difficult. So I would not suggest that at all. So my personal preference. So anyway, hopefully that helps. We'll be in the Discord in a few minutes. Again, risk off has been risk off for the past few days. Most rallies move up. We'll be looking to short unless we see significant change in sentiment, structure, and trend. So, all right, make it a great Friday, everybody. Everybody have a great weekend. We'll see you in the Discord in a few minutes. Thanks.